Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, Alex Mashinsky is back with us. He's the CEO of Celsius Networks. We're going to take a look at the future of digital currency and payments, one of our favorite topics on Trade Talks, as well as 2020 is going to be a breakout year for Bitcoin. That's an exciting prediction there. Before we get into the future of finance and payments and cryptocurrency in general, it seems to be as if there's a shift happening from traditional banking into more technologically advanced kind of banking. And there's a couple of reasons why. Explain that to us.
Sure. So we're seeing a lot of neobanks popping up, right? You see ads all over the place for new banks that are paying you just a little bit more interest. But really, most of these institutions only pay less than 2% per year because effectively the Fed keeps printing money and lowering rates. The opportunity with Bitcoin is the ability to really, and stable coins like USDC and so on, is the ability to earn interest of 7, 8, 9% per year. So it's 3, 4, 5 times better than any bank pays you, right? So because there is this pressure to lower rates and even go to negative rates, right? The $17 trillion worth of negative yielding bonds. There's a global search for high yielding assets that are still safe, but yielding high single digits.
All right, let's talk about cryptocurrency. You think 2020 is going to be a breakout year for Bitcoin? Certainly the first couple of weeks of trading, we've seen nice momentum to the
Sure.
upside. All right, why do you think it's going to be a breakout year?
Well, first, we closed the decade with 9 million% appreciation. Right? So if you compare that to the best performing Nasdaq stock, that would be Netflix with 4,000%. So this is, the Olympian here is 2,000 times better than Netflix. So it's already outperforming any other asset class. And because so many new people are joining every day, and you have this halvening, so Bitcoin basically is mining Bitcoin pays only half of what it used to, meaning there's going to be less supply and more demand. And as there's less supply, more demand, prices go up. So the halvening is happening sometime in May, and I expect that the second half of 2020, you're going to see new highs for Bitcoin, which will be, again, between $30,000 and $35,000 per Bitcoin by the end of 2020.
All right. Now, the U.S., you don't think it's going to have an official digital coin, but there are big corporations that are coming on board with this. JP Morgan, of course, Facebook,
yes.
and Libra. Do you think that's going to be a continuing trend where individual corporations are going to take it upon themselves to create stable coins?
So yeah, so you have three kind of groups. You have the open blockchain, which is Bitcoin, Ethereum, and so on. Then you have the private blockchain, so that's like Libra and the JP Morgan coins. And then you have the government blockchain, which is effectively what China is trying to do, right? To issue its own blockchain currency. And those three models effectively competing. Is it going to be an open, like internet-like global currency? Is it going to be corporate-led, or is it going to be government-led? That's what the three horses that are competing to see which one of them is really going to win. The world doesn't need all three. So there's probably going to be a currency for the internet, which is going to be a version of the Bitcoin. And there's going to be probably a government. Many governments are going to be issue blockchain-based currencies. I'm not a big believer in the corporate version, in the JP Morgan version.
All right, and why would that be?
Because, again, it's like intranet. It's an island of financial connectivity. Now, it's issued by a very well-respected institution. But if you go back to the early 90s, we've seen that movie. We've seen IBM and other companies issue their own intranets. And even though they were gigantic companies at the time, they've not been able to get the whole world to adopt it. So the world is looking for global standards for decentralization, right? And effectively, the Bitcoin, the Ethereum represent decentralization. We don't want more centralization. JP Morgan represents another version of centralization, which I think the world is moving away from.
All right, now Solomon Islands, do you think it's going to be the first country to officially replace its dollar and have an official currency that's based on a digital asset?
Yeah, so there's several small islands, like Bermuda is trying to do that as well, where they basically made USDC a stable coin, a legal tender. So you will see more and more of that, and they're trying to do a lot of different institutions are trying to, or governments are trying to do that, but to basically increase the velocity of money, right? So this, by enabling stable coins, you increase fungibility, you increase the velocity of money, which creates faster transaction 24/7 instead of just 5 days a week with the banks and so on. So all these things are helping scale the economy compared to the competition. So Bermuda is trying to compete with the United States. Solomon Islands trying to compete with some Asian countries. So that's what's driving this type of adoption.
Yeah, there's certainly no reason why checks take 10 business days to clear, or even T+3 or T+2. It doesn't have to happen with the technology that exists right now. Let's talk about Celsius Networks and where you fit in the cryptocurrency ecosystem.
So Celsius is really created to always act in the best interest of our customers. Our customers give us digital assets to manage. We earn yield for them, and we lend these digital assets to institutions. So we have over 200 institutions that work with us. They borrow these assets, they pay interest, and we pay 80% of that to the user, right? So if you think of JP Morgan, they just announced the best quarter in its history, right? They earned annualized something like $35 billion a year. They give nothing to their depositors, right? They give almost nothing back. All of that profit goes to the largest shareholders, to the institutions, to the guys who receive the dividends. We think that a decentralized version of JP Morgan is an institution that acts in the best interest of depositors, not in the best interest of the shareholders, right? And this Celsius Network was created to take care of the depositor. And we think that in that new world of decentralized cryptocurrencies, there's no such institution. So that's why we started Celsius Network.
Well, plus you also have increased operating efficiency as well to help
Yes.
keep down the cost, because everything's done with the newer technologies that are available out there.
And try to earn 9% on your money anywhere else, right? So that's really, it's huge. It's 9 times more than JP Morgan pays you.
Yeah, I mean, even if you look at an average stock return annually, I mean, last year was a banner year. Of course, it's not typical. 8% is considered a great return, so it's even better than what a typical equity return.
Right, and these are asset-backed loans, right? So we are effectively, the loan is issued against assets, so your risk of default or lack of payment is much lower than the volatility of any bank or any any specific stock you'll be investing in.
Are you seeing growth in your user base?
Huge growth. So we just crossed $450 million in digital currencies that were giving to us to manage. Over 70,000 people from over 170 countries signed up with us. And again, all these people are starving for yield. They're coming to us for yield. We're managing the deployment, and we're giving them 80% of what we make. And Celsius is the largest player in this space, but there are now we have a lot of competition. Everybody's like, oh, that's a great model. Why don't we copy you? So we're trying to add other services that, again, are always acting in the best interest of the depositor, and really add them in a way that is transparent, that is that the user doesn't have to do anything, right? It's always good for you.
Well, I mean, increased competition is always a concern, but it's great overall when you look at the bigger picture, particularly if you believe in the cryptocurrency and digital asset and the blockchain stories, how it's going to transform traditional banking and fintech in general. That's a good thing when you have competition.
Yes, because there's a lot of new talent coming in.
Yeah.
There's a lot of new assets coming in. And those assets are basically, the yield is competing against negative rates, or competing against 1% that the banks pay you. So depositors or users have to decide, where am I putting my money? Am I giving the money to the bank, who's basically not treating me very well, or am I giving it to someone who's acting in my best interest? And that's really the decision that each person has to decide as to who do they want to support. Do they want to support decentralization, or do they want to support the centralized banks that really are not acting in the depositors' best interest?
All right, Alex, great to see you as always. Thanks for joining us.
Thanks for having me again.
And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.